Hello, welcome listeners and market participants, and welcome to KBRA's European Credit Podcast, Conversations in European Credit. I'm Gordon Kerr, Head of European Research at KBRA, and today I am joined by my colleague, Luigi Griffo, from our European Investor Relations team here at KBRA. Today, we will be covering the topic of our investor survey, where we have solicited responses from across the European securitization market. The results of this survey can be found on kbra.com, along with our latest reports on the recently held annual Global ABS conference, where we recapped each day's discussions. The intention of the survey is through 5 short questions to get a picture of the market. We ask investors a couple of questions about the type of investor that they are and the sectors that they look at. And then we engage to ask them their views on the direction of spreads over the next 6 months, ask them about their views for the markets that are likely to see the most collateral stress in the next 6 months. And then we ask them about their views on the issuance pipeline and where they see things going in the next 6 months. Lastly, we ask them how they would characterize the current market environment. For our regular listeners, for this podcast, we are going to do things a little differently. My colleague Luigi is going to be sitting in my traditional seat and will be the one asking the questions. So, Luigi, over to you.
Yes, thanks for having me, Gordon. We're now 6 months removed from the last survey, which we did in December 2022. And it's been interesting to see how that effectively tracked against the market in the first half of 2023. The listeners will recall that at the time, the structured finance investor community was pointing towards a more optimistic environment compared to the June 2022 results, despite signaling a slowdown in activity and potential for further spread widening. For this most recent survey, it seems like the sentiment has shifted again. So shall we start from spread performance and discuss what investor views are on this?
Thank you very much, Luigi. Yes, in response to this question on spreads, 42% feel that the spreads will head in a widening direction, while 28% believe that the markets will potentially migrate in a tightening direction. There are a significant number, about 30%, that view that the market is unlikely to move in either direction from current levels. On the more extreme ends, 8% are convinced that the market will widen outright from here, and 5% think that the market will tighten more aggressively. These responses highlight a changing sentiment from our December 2022 survey, with views moving to a greater expectation for spread widening versus those results. In December, only 24% expected spreads to head in a widening direction, but this was a large improvement on the sentiment that we actually saw in June 2022, where 66% of respondents expected markets to widen. In December, the overarching sentiment was for a tightening in spreads, with 46% of investors holding this expectation, in contrast to the dominant sentiment for widening in June 2022. Currently, there is a more balanced view with divergent expectations on the direction of the market, albeit with a slight dominance for spreads to head in a widening direction. These views on spread movements vary across the market sector and survey respondents. For example, investors in ABS hold the most dominant positive expectations, but other asset classes, such as those classified as other, which may include things like SRT or private credit, hold a higher expectation to tighten outright. Overall, RMBS investors hold a balanced and more divergent view for spread directions, as do CLOs and other asset classes. CMBS and MPL investors continue to express the strongest expectations for spread widening, given the ongoing economic concerns surrounding these sectors. That is not a particular surprise. However, CLOs and other asset classes such as SRTs and private credit also have more than 30% expecting spreads to head in a widening direction. The types of investors with the strongest spread tightening expectations are independent asset managers and hedge funds, with those categorized as other types of investors, pension funds and hedge funds holding the strongest positive views, but also an equally negative bias in their expectations. So a balanced picture overall. Insurance companies and bank investment investors believe that further widening will occur, but there is a contingent of the latter who believe strongly in a potential outright tightening of spreads. Insurance companies overall hold the strongest views towards further widening in the market.
Thanks, Gordon. It's always difficult to describe the market in one sentence, but this seems to be one of the most popular questions in our survey. So how would the investor characterize the current market in one sentence?
Most of those surveyed hold the view that the market is performing, but is at risk of large negative moves, with 29% of those surveyed taking that view, while 15% find the market to be relatively volatile and difficult to predict. And a minority have taken the position that they feel that the market is a steady positive performer, with a fair number believing that the market will likely see ups and downs, but is generally a steady positive performer. There's also a segment that see the market as moving to its own beat, kind of ignorant of the other markets, with 23%. So broadly speaking, a well-spread spectrum of views on how the market currently feels.
Gordon, everyone will agree that a substantial pipeline is crucial for a healthy market. So what are market participants' expectations for issue numbers in the 6 months ahead? And can we draw any contrasting views based on asset class?
Yeah, the majority of investors feel that issuance will return, while the largest number, 28%, view the market as having moderate improvement and growth going forward. A quarter of them see it as having a steady supply over the next 6 months. And then after that, 22% expect the second half will be very quiet, and a further 20% expect that the market will actually move back into the days of largely prime collateral and retained transactions, which is sort of what we've seen a little bit in the second quarter. Sector-specific views show a slightly different picture depending on the asset class. So investors who expect a quiet market are those with coverage in CMBS, with 52% estimating either quiet or largely retained, as well as NPL investors with half of them expecting the same. The most positive investors for new transactions are those from the other sectors, such as SRT and private credit, with most expecting improvement and moderate growth. CLO investors are also positive on the pipeline, with 29% believing they will see some progress and 10% expecting a strong and expanding pipeline. ABS and RMBS investors hold the strongest views that the market will continue to tick over in some form, with the lowest views for a quiet market at 3% and 11% respectively. However, these investors also hold strong views about a return to prime and retention, with 28% and 30% taking that view.
It's interesting to see how the perspective can substantially change based on asset type. One of the questions we ask investors is around collateral performance. And here I think we can draw a clear parallel with the responses of our previous survey.
Yes, absolutely, Luigi. The overwhelming majority, 70%, expect to see deteriorating asset performance in the UK, followed by Spain with 8%, Pan-Europe with 8%, Italy 5%, and various others at smaller percentages. This is largely in line with the December 2022 survey, where there was also a large expectation for the UK to bear the brunt of the current high inflationary environment. However, there was a little bit of change in amongst the others, with Portugal increasing as an area of concern since December, and concerns for Germany's performance have actually decreased. Outside of this, though, there is also a growing expectation for deterioration across Europe as a whole, migrating to 8% from 2% in December 2022. Investors across all sectors agree that the area of most concern is the UK, with the exception of MPL investors, where the UK is actually not present. Here, the view is that there's a more broad expectation across a number of countries that will all share in performance deterioration, with expectations for the highest deterioration in Italy. Those of most concern for UK performance are the CMBS investors with 74%. However, CLOs at 71%, RMBS at 70%, and ABS at 66% are all also concerned about the performance of the UK. The other areas of concern are Spain, with 20% of other investors and 17% of NPL investors. Pan-European concerns were elevated amongst ABS, RMBS, CMBS, and CLO investors. So broadly speaking, across the board. And Italy, of course, as mentioned, was of particular concern amongst MPL investors, as well as CLO and RMBS investors.
And finally, Gordon, the securitization industry gathered in Barcelona recently for the annual Global ABS conference, where KBRA was actively engaged with the market across many meetings. We were also represented on a number of important industry panels, including the ABS researchers panel, to which you contributed as a speaker. What were some of the key takeaways from the event, and did it match with investor survey responses?
Yeah, that's a great question. I mean, yes, it largely did match with our survey responses. The market meetings and discussions were both, on the one hand, cautious and on the other hand, constructive. Concerns about an increase in defaults and deterioration of performance were countered with still stable performance currently and constructive conversations on new issuance and a pipeline that should grow into the end of the year. If we look at day one, this included some concerning discussions around CMBS, a little bit more constructive on CRE CLOs, worries about corporate credit performance and other collateral concerns, as well as a pushback on hopes for a return of issuance. This negative issuance sentiment was supported by regulatory discussions on the likely slow movement of the change of Solvency II and the slow pace of change in prudential regulation currently underway. Day two was more constructive, on the other hand, with Lord Jonathan Hill bringing up everyone's hopes for change with an inspiring discussion about the mood for change in the regulatory landscape. This was followed by some panels where the overall sentiment was both concerned about performance and refinancing to being constructive, with investors eyeing the opportunities with both excitement and caution. The investor panel mirrored the KBRA survey, as we have just discussed, with different investors taking both the side of widening and the side of tightening potential. Day three, which is usually a wind down sort of day, was actually well attended and included a number of important discussions for the industry. The keynote, David Wright, mirrored the views of Lord Hill with a push for making the case for regulatory change and the importance of timing. A discussion about the impact of Article 5 on the investor side of the market was very insightful into the need for, firstly, clarification, and secondly, for adjustment to help support the expansion of the investor base and remove some of the barriers to entry. We managed to cover summaries of a large number of the panels across the conference in our daily recaps with greater detail than I just summarized, and you can find all of those on kbra.com.
Thanks for having me on, Gordon. Yeah, I'd just like to thank all those that contributed to the survey and look forward to the next one in December.
Thank you very much, Luigi. As you can see, the current market situation is a challenging one. In KBRA's previous survey from December 2022, investors showed a more optimistic view than in our original June 2022 survey regarding both spreads and potential issuance. The views were not overwhelmingly positive, though, as there were some concerns about the potential for widening and decreased issuance. This proved to be prescient as issuance has slowed and spread improvement has been positive, but limited. In this latest survey, the tone has shifted towards a more negative bias, but more positive than June of last year. Opinions this June appear to be more divergent overall, with stronger views in both positive and negative directions. One notable area of positive migration is towards a stronger pipeline of transactions. Amid this divergence, though, one major consensus is the continued concern for UK collateral performance. With the sticky levels of inflation that we have recently witnessed, as well as increasing interest rates, this is an area that we will continue to monitor ourselves. You may even want to check out our report on the buy-to-let sector, which highlights some of these upcoming risks and the challenges for refinancing in the sector. Thank you very much to all those who participated in the survey. We look forward to hearing your thoughts in December. You can find greater detail in a number of recently published reports on our website, kbra.com. Make sure you are registered to receive our latest commentaries and have subscribed to our podcast. Of course, feel free to give us a review as well, which was helpful, and make sure you are engaged with our experienced analysts. Thank you very much for listening. We look forward to bringing you more conversations in European credit. Best of luck to you all out there as we continue to combat the challenges ahead.